Guys, as you can see here, I'm buying SPX all the way through to the upside. Now you might look at this trade and be like, Roy, why are you buying SPX? There is bottoms down here. There's a trend line going up. There's a lot of liquidity down there. First of all, shut the fuck up. No one is asking for your opinion. That's number one. Number two, I'm just joking. Number three is, even if there's liquidity through to the downside, there's also liquidity right here through to the upside. So who's the decider whether the liquidity to the downside is going to be taken or the liquidity through to the upside is going to be taken first? What decides in that case? And the thing that decides are the higher time frames. So let's go check the 6 hours right there. I mean the daily in that case. Right there. So as you can see, what's happening right here, the market melted through to the downside there, took out this low, and then started pushing with momentum through to the upside. So after liquidating through to the downside, we had momentum through to the upside, indicating that we might push through to the upside. So after liquidating this low as well, we pushed through to the upside. Let's look at the top of this push through to the upside. We formed, boom, liquidity through to the upside. So on the higher time frames, we liquidated through to the downside, we're pushing through to the upside, we formed liquidity through to the upside, and there's this liquidity right there. My bias for SPX right now is that the market needs to push through to the upside into these double tops right there. Okay, this is the liquidity and this is the liquidity. One liquidity here, two liquidity there, liquidity to the downside, the grab. As we were pushing through to the downside, we had 1, 2, 3 drives pattern. 3 drives to the downside, which is the 3 drive pattern. And therefore, 3 drives to the downside, liquidity through to the upside, liquidity to the downside has just been liquidated. Everything right here in this scenario is telling us that SPX needs to go through to the upside and take out this high. And therefore, this is what I'm betting on. And this is why I'm betting that on the lower time frames right here, we are going to take out the liquidity through to the upside first. Even if we want to come back later for this liquidity down there, we need at least to push through to the upside, take out these stops right here. As you can see, let's mark them out, please. Thank you. Let's mark them out right there. Take out this liquidity, and then after we take out this liquidity right there, maybe we push through to the downside after that, in which case I'll be protected on my position, partial profits will be booked already, and it will be okay if it turns around and comes back. But from here into here, it's almost a certain movement for me. So this is what I'm betting on at the moment. Now, as the market went down right here, what we can see, because of course it's not enough to just analyze bias and say, okay, bias is up, I'm going to immediately buy, because there's maybe liquidity through to the upside. No, you need an execution methods. And right now, just to make a summary out of it, the market pushed through to the downside here. Okay, we liquidated through to the upside above these stops, as you can see. Then we melted through to the downside. As we melted through to the downside, we formed these bottoms right there. And then we formed these bottoms right there. And after creating all this liquidity, the market pushed down right here with this wick through to the downside. Those bottom traders, where would they place their stop losses? Below the latest low, which is right here. Boom! Tackled their stop losses, liquidated, then pushed through to the upside. So for me, liquidation, then pushed through to the upside means we're headed to the next liquidity zone. Now, where's the next liquidity zone? In my opinion, is this one right here. Okay? This needs to get taken. This is my next liquidity zone after grabbing the liquidity through to the downside, and therefore this is what I'm eyeing right now. I need this liquidity zone to be grabbed. After this liquidity zone is grabbed, we'll see where the market will go from there. Will it continue according to my bias, or will it turn around and trigger me out? However, either ways, as soon as we reach this area, I'm protected, partials are booked, BE, let's say, whatever. I don't think I'll place it at BE, but I'll just take enough partial profits for it. If it comes back and triggers me out, I won't lose anything from my original capital. So we'll see how that goes, guys. Hello again, guys. I hope you're well. As you can see, the market pushed in my direction, hit my TP area, and then after liquidating these highs, as expected, the market turned around and went down. Gladly, I was out before that. 1 to 3 risk to reward ratio, simple TP, and then the market pushed down, which further proves my point, guys. So my bias, going back to the bias, is that the market needed to push through to the upside and tackle these tops right here. It pushed almost 70% of that movement, and then it changed its mind and went back down. Now, if I were to hold the position from there and be like, you know what, I want to make the maximum amount of money that I can make and just hold it all the way up here, like 1-to-7 risk reward ratio, I would be like, oh, big position, great. But then it would stop halfway and then melt down. But since I enter many positions, small 1-to-3 risk to reward ratio positions, and I dissect the bias going up, what happens is I enter many positions here, 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 here. So if the market changes its mind and goes down, I don't lose anything. And as you can see, 1-to-3 out, the market went down and I wasn't offered another opportunity. Right now, I was looking at the market to see how it reacts to this liquidity right there. Obviously, it's still melting through to the downside, and then this liquidity next. And I'll let you know what I do next for SPX and if my analysis changes and all that. However, as you can see, dissecting your bias into small micro portion trades saves you from like a losing position if you are wrong with your bias. Right here, I was partially correct with my bias, so I expected the market to push up. However, I set a target that is higher than what the market wanted to actually push to. And therefore, since I set the target higher, the market turned around and went down. And even though I made this mistake, it didn't cost me any money. Nothing at all. And therefore, this is why I like to trade this way. And I hope you guys, by me recording this 100th video of me explaining this concept, that you're now convinced by it. Choose a bias, long bias, dissect it into micro portion trades, and that's my style if you wanna follow my footsteps. I'll see you in the next video, guys. Good luck. Feel free to subscribe, notifications, all the YouTuber stuff, and I'll see you later.